Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, head trading coach and market analyst over at howtotrade.com. And this is sort of our inaugural daily live stream that we're going to be having on the Switch Markets YouTube channel. So we want to welcome all of our clientele over there at Switch. I want to welcome everybody on How to Trade. We've also got a Forex Signals audience that's significant and sizable. So I want to welcome everybody back to the trading room, back to the live stream. Today we're going to talk about July's trade. Now, today has been a big day in the markets, even though we weren't really expecting much in the way of price action. There's definitely a lot going on, and it all has to do with politics. You remember that big, beautiful bill we talked about yesterday? Well, it did, in fact, pass the Senate, and now it's going to go back to the House, maybe for some revisions before it makes it to Trump's desk. There's a very good chance that this bill will be passed and signed into law. It will not shock me if it's done on the 4th of July. It will not shock me at all. A lot of times, the Trump administration, and Trump in particular, loves to be theatrical. And that's exactly what could happen here. It could be this bill being signed on July 4th in the Oval Office. I could see that happening. So I want to welcome everybody. Claudio, good to see you. Claudio, Tuku, always a pleasure. A lot of new faces around, a lot of new names. That's fantastic. A lot also of veterans of the trading room, the How to Trade trading community, and then also some folks that have been with us for quite some time on Forex Signals. So this is an interesting week. We talked about it yesterday. Is in fact this week going to be a great week? And I personally, I'm seeing lots of reasons for skepticism over really any price action. As you can see from our big board, you've got the Dow Jones Industrial Average is up about 322, but the NASDAQ's getting crushed. And we had, well, it's not really getting crushed, but it is getting crushed because of the Elon Musk, Donald Trump feud took off again. You're seeing Tesla get smacked. You're also seeing some stuff got stripped out of that bill that gave afforded AI almost unprecedented protection. So there's a lot going on, and it's all political. It seems like every time I'm on one of these live streams, we're talking about wars, we're talking about geopolitics. We're not even really talking about traditional economic metrics anymore, and that's because they just have taken a back seat to what has just been a whirlwind first 160 days of the new Trump administration. So I've got the VIX really dialed up here for you and ready to go. The volatility index, CBOE volatility index. It's a very important gauge. It's a barometer of the amount of fear in the market. As the VIX goes up, it means that typically the selling is winning the day in the S&P 500. And if you see the VIX go down, typically that means the bidders are winning the day. So when we look at a long-term VIX chart like this, the only thing we're really trying to do is we're trying to figure out exactly where the sentiment is. And if, in fact, we have an opportunity maybe to buy or sell based on the amount of panic or fear in the market. Right now, there's not much fear. You know, it's like those old T-shirts, no fear. There is not much fear. As a matter of fact, it's a very, very positive dynamic facing equities and risk assets right now. We've seen sort of the Israel-Iran war. I mean, it seems like, forever ago now. We've seen so many developments that have happened, and it's only been about a week. It's really only been about a week. So when we're looking at these charts and things like the VIX and trying to figure out what to trade and how to trade it, it's important that we keep our heads screwed on straight, and then we don't get carried away with the most recent news items, because although they are important today, they may not be important tomorrow. Right now, nobody's thinking about Israel and Iran. World War III has taken a definite back seat. Now everything's about the politics of getting the big, beautiful bill passed. So good to see you, Carlo. Welcome. Hi, Claudio. Good afternoon. Dave F19. Good to see you, Dave. Welcome, everybody. If you have any questions at all, be sure to ask me. This is one sort of part of what we like to do here is make this an interactive trading experience to where if there is, in fact, a question that you'd like to ask, you just feel free to fire away. And only a couple rules. If I don't know the answer, I won't try to BS you or spin a yarn. I'll answer if I know it. If I don't know it, I'll try to point you in a direction of maybe somebody who does, or maybe an area where you can where you can potentially find the answers that you're looking for. So I got asked a question earlier today that was a pretty good one. It really was a pretty good one. And it was, Shane, I'm looking for a strategy that I can trade pretty much every day with consistency that I can back test and build my basically my approach to the market around it. And the orb is a pretty good one to do just that. The opening range breakout strategy, that's the one that I recommended, because you're going to get trades every day. You're going to have a trade to scrutinize every single day, and you can get in there and make sure that it's easy to back test. Number one, it's very easy to back test. All you got to do is break down the strategy and then just apply it just visually. Some different things that you could do just with a pen and paper. So it's not that hard to back test. You don't need to have AI capabilities, although if you are a Switch member, you could definitely be looking at potentially using the algobuilder.com functionality. We're going to be talking more and more about these features and some of this value that we're passing on to the customers here at Switch Markets. And also over to How to Trade. Remember, we've got a trading community over there that's designed to help you develop as a trader, and that's the idea. That's what we're trying to get done here. Let me see. Jot Singh. Hi, how you doing? Welcome. New name. Let me see. How do I learn the SMC and ICT? Well, we've got some videos that deal with some of the smart money concepts and some of the ICT concepts. Those are in our How to Trade Com YouTube channel. Feel free to go over there and check them out. We've got, I believe there's 5 or 6 or 7 videos about liquidity sweeps, about fair value gaps, and also some different things with market structure itself. So if, in fact, you're interested in your ICT and SMC, you can go over there and check those videos out. Personally, I'm not a smart money concepts or an ICT specialist. I don't necessarily believe in the methodology. A lot of folks do. A lot of folks really love it. I'm not going to sit here and lie to you and say, if I was doing anything, I would do the ICT. I sort of practice a very, very basic form of trading that can get complex, but it hinges on horizontal support and resistance levels, and it also hinges on key levels. So that's what we want to. That's what I want to get done, is find key levels and find great trades. Now, smart money concepts, market structure, and all that, I really sort of shy off of it because I'm not necessarily certain about the methodology behind it. I think there's a lot of questions, a lot of guesswork. Now, a lot of people have made a lot of money using that type of methodology. That's great. Go ahead, hop to it. Go ahead. But for me, we have a few videos in that How to Trade Com trading channel there on YouTube. Check those out. That'd be a good place to start. And if you have any questions, be sure to ask. But I'm not an ICT or an SMC. I'm not an SMC specialist, so I may have to point you in a different direction. All right, everybody, remember, if in fact you're interested in getting involved in the live market, be sure to check out Switch Markets. This is the Switch Markets community now. We're talking about the converging or really combining the How to Trade and Switch Markets into one really powerful group of traders. No matter what your experience level is, Switch Markets can help you get up and running. Now, the only thing is, if you're in the United States, you're probably not going to be able to trade with Switch Markets. If that is the case, then reach out to me directly over at How to Trade, and I'll be sure potentially to point you in another direction. For Forex, I believe we have an affiliation with Owanda here in the United States for American clients. But if you're interested in trading futures, which a lot of you are, especially when we talk CFDs, you pretty much have to trade futures here in the United States. Reach out to me. I can tell you where I do business in the futures markets, and potentially that may be a place for you to start as well. All right, we've got a few things to cover here as far as trade ideas go. This is a big one, and I think it's very, very important that we understand what's happening in the US 30. Right now, it's all about the big, beautiful bill and the politics, so we're going to unpack that in a second. But one of the great things about trading in general is, number one, there's a million different ways to do it. There really is. There aren't really no right or wrong answers. The right answer is the one that makes you money. And what you have to do when you're trading is to, number one, use your head. You need to be consistent, and you have to show a little bit of courage when it comes to taking risk. That's what we do for a living. We take risks. We wait for our setups, and then we take our risk. Well, this setup right here is coming our way, and I think that it's going to be really on the front burner, on our front burner very soon. And this is going to be the US 30. Now, 45,000 is the big level. So if we're looking to break down the US 30 and try to figure out exactly how to trade it, I just went in there and I marked 45,000 here on the monthly chart, or this is a weekly chart. Now, theoretically, 45,000 doesn't hold any special validity. Like a lot of market technicians are going to say, so what is there, like a Bollinger Band up there? Is there a moving average up there? Is there anything up there? And the action is no. The actual case is no, there isn't. But it is a key level. And I always want people to think about the markets in a little bit different terms than you usually do. We fall in love with indicators. We all have indicators on our charts. So this one right here is just pure price action. I don't have any problem at all with just pure price action. But you have to understand that the key levels oftentimes dictate what the price action looks like. Like our smart money concepts, JOT is writing right there, and I'm gonna answer his question in a minute. Do these order blocks up here, do these liquidity sweeps mean something in isolation, or do they mean something because of the key level? It's the old chicken or the egg thing, guys. Is a market overbought because the RSI is over 70, Or is the RSI over 70 because the market's overbought? It's the chicken or the egg. For me, I look at 45,000 and I immediately know a couple of different things. Number one, I know that's the biggest level on the books for the US 30 and the Dow Jones Industrial Average. No question about it. Why would it be important? 45,000 is going to be important because it is a big round number that is going to be an area of natural resistance. And what makes that area valid, what gives it validity, is that everybody has an opinion on the US 30 from 45,000. Now, right now, there's no question to me we probably should be long. And we've got an orb trade that I'm going to show you in just a second, an opening range breakout trade in just a second to show you exactly how good of a trade you had earlier today. Probably should be bullish. But are we bullish really until the end of time, forever and ever and ever? Or are we going to be bullish probably until we test 45,000? 45,000 is a big resistance level for me. There's no question about it. So if you were a smart money concept or an ICT trader, there's no question that you've got some liquidity sweeps, especially in those 2 weeks right there. We rallied right up to 45,000, and then the sellers stepped up in a big, big way. Looks like some people got their stops run up there before the market reversed. So for me, I would be bullish the US 30 until you get to the 45,000 level. As far as what happens then, that goes back to our trade idea where we were scalping right in front of that level, and we were looking at about 44,975s were our sell, and we're looking for about 100 pips, or excuse me, 720 pips to the downside. So I think that's a pretty good trade. I would be watching that very, very closely, have an opportunity to sell 44,975s, something like that. That could be very, very good. That could be very good. Why? Because it's going to be a difficult thing for price just to break and run through 45,000, especially when we see the history and the sellers that have been up there in the past. That's absolutely imperative that we understand what can happen at that key level. So that's going to be our first trade idea up on the big board. I think that it's a pretty good one, and I'm awfully confident in how that one turns out. Now, as far as what can we be doing here? Is breaking down fundamentals for today. There was a tremendous number of economic reports out this morning. There was a bunch of I believe it was ISM manufacturing PMIs and things. We're not even going to bother looking at them because it doesn't matter now. It doesn't matter. This is what matters. You've got Trump's mega bill squeaks through the Senate, but the House can still reject the changes. So the real thing we're looking at right here is potentially one of the biggest government spending bills ever. The biggest government spending bill ever. I mean, it really is. I mean, it's absolutely huge. There's funding in there for everything. That's a lot of things that are needed and also a lot of things that aren't needed. And they got the ire of Elon Musk. Earlier today, Musk just went on an absolute tirade last night. Him and Trump are fighting. There was, once again, Trump sort of alluded to maybe, just maybe, the government was going to start looking at a lot of Tesla's contracts. And that is what gives you the price action, the big negative price action. So Tesla stock right here is down about 4.33%, and it was down well more than that. No question about it, but now we're sort of rallying and beginning to stabilize. So the markets have seen this show before, especially with regards to Tesla. We've seen the big crash that really has been politically driven, but back in May, late May, when the fighting started between Trump and Musk, you could definitely saw just an epic sell-off, and the reason why was because Trump basically threatened to cut Musk's subsidies, to cut all the contracts, all the government contracts. It's important to remember what Tesla really is. It's a tech company. And Musk himself has security clearances at every level because they've worked on top secret stuff with the government. Tremendous amount of money goes through Tesla. Taxpayer dollars go through Tesla. And Trump basically threatened to cut it all off because they're fighting. So I don't really know what to make of it, to be honest with you. As far as Tesla goes, remember, you can just trade Tesla shares. You can also trade Tesla CFDs. And one thing that I would love to look at right now is our 920 EMAs. I would love to see our 920 EMA strategy because it's one of our more popular strategies. It's a crossover, something like this. Coded 920 is what we're looking for, and these are the codes. I've covered these several occasions here. And I want to go ahead and see what happens on Tesla. Where are we at? There was your buy. 5-minute chart on the US 30. That's fantastic. I want to see Tesla right here. Big gap down on the open. No question about it. I want to see that daily chart. Okay. Gold bars are buy signals. Purple bars are sell signals. Very difficult market. No question about it. You can see just how choppy life has been here on the daily. Pretty good time frame, though, as far as using a daily chart for the sort of swing trade stocks. I really like this 920 with respect to that. But you can see right there was the big bid signal back on the 23rd of June. And then since then, you got a bit of a rally there. And then we came off very, very hard. And now that 20 has crossed under, or excuse me, the 9 has crossed under the 20 EMA. And now we're effectively looking to the short side of this market. So how far down, could Tesla go? It's really hard to say. I think we could see it. I think we could see it down in the 250s. I mean, you see back here, we had just an amazing 920 trade where we caught this move from right around 285 to 360. That's beautiful. When we were down in here, this area right in here where there was a lot of chaos hitting Tesla, I was really looking for 200 or 190. I thought that was a great level to bid Tesla shares from, but as of yet, we just haven't got it. So right now we're trading right around 300, 302. If, in fact, we do get maybe that crossover, I'm looking for a bigger sell-off than 300, though. I'm looking probably for 275, maybe 250. Somewhere down in here gives us a great chance to get into this market. And if, in fact, we come down and sort of trade around this zone, and then we get that crossover, that daily crossover, this may be a great trade that could come on maybe even later this month. Remember, this is July's trade now. We got a fresh month. This could be a pretty darn good one. I think we have an opportunity to succeed there with shares of Tesla. So I'm watching closely. But as of right now, it's not time to do anything. Not time to do anything. All right, guys, what do we got here? We got some comments here in the live chat. Let me see. Only price action is enough for intraday trade. I'm from India. Oh, welcome. We have a truly global community here. We have folks from everywhere. I'm here in the United States, up in the northern part of the United States. So if you're tuning in from India, I am flattered. And we do have a lot of material and a lot of things that you can check out here. A lot of resources for you to get up and rolling in the live market, whether it be strategy, psychology, or just basic market reads from a veteran trader that's been around since 2011. So I've been around a while. If you have any questions, be sure to ask. Let me see. Carla Matola, Trump is a communist. Well, I mean, there's a lot of folks that believe that Trump's not necessarily the best. There's a lot of folks that really love Trump. As of right now, the markets are going to make all-time highs, and a lot of that's predicated upon what's happening with the tariffs. We saw some reports where the tariffs actually have raised about $120 billion for the United States already, and we're already starting to see the foreign investiture, the foreign direct investment into U.S. markets. You can't really argue with where they're at through the first 6 months of the administration. I mean, really. So I'm curious to see where we're at in another year or so. I think it's very difficult. Let me see. Antonio, the 920 on the 30-minute chart is gold. Yeah, good to see you, Antonio. I like the 920, and I love the 30-minute chart during the U.S. session. I think that if you get those crossovers and those trades, whether it's on the U.S. 30, the NASDAQ, or maybe even gold futures or WTI futures, you can do pretty well. You just got to make sure you align your stop losses correctly with your profit targets. Let me see, Carlo, that looks like my indicator. Do you also use the MA spread ratio in it? No. The MA spread, this indicator right here, the 920 is one that we put out. I show you how to code it in the video on our YouTube channel. The spread indicator, my guess is you're talking about the distance between the 9 and the 20. It's fantastic. And the reason why is I don't have to sit around and wonder about ratios or really anything that's hard. I can just look at it and I'd say, okay, when the shaded area gets big, when the distance between the 9 and the 20 gets big, that means we're trending relatively heavily. And then when we get tight, like this, frequent crossovers, this is absolute chop city. In my view, if you're going to trade something like a 920 or maybe a 5813 or any EMA crossovers, and you get into a situation like that, you don't trade it. You got to wait for a break. You got to wait for this shade to start to develop. See, like right here, we were very, very flat, sort of, but you still had a shade in there. You still had a distance between the moving averages. So when you finally got that crossover, there was some pretty good momentum. Now, from an intellectual, I guess, a real basic standpoint, as long as I see some shaded area in there, I'm more than happy to trade it. Look what you have in here. You got no shade. You got no chance. So for me, I mean, I would be waiting for a break. If you wanted to sell Tesla on today's close maybe or on tomorrow's open, I wouldn't really have a problem with it. You just got to remember that you're going to have to build your trade accordingly, and it's been a hot news cycle. But something like this would be your stop loss probably right up there to the top side of this, 327.48. And then something like this cross under here, you're going to be looking probably to get short, maybe around 302, something like that. So it's a significant risk. But in order to make that work to the short, like with a short CFD, you're going to be looking at a stop loss up at 360. You're going to have to get a big follow through from 300-ish down to about 240 or 250 to make that worthwhile. And that's just with a one-to-one risk versus reward. I'm watching closely. I don't really necessarily think I don't think it's a trade just yet, but you do have a signal and you do have an opportunity to take that swing trade. I'm really skeptical of the news cycle. I want to be very, 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 very confident that the Musk-Trump thing is over before I jump in. And look at this. Musk shreds Trump bill as debt slavery, vows to unseat Republicans who back it. I heard that earlier today. Elon says he's going to start his own party. It's going to be a third party here in the United States. Over the course of history, things like that have never worked. The independent parties, things like that have never worked just because they don't have the backing. Musk is the richest man in the world. He's a media giant now with X. If he decides to start another party, they're immediately going to have the cash and they're going to have the media outlets, and a lot of influencers are going to line up to help. That could be a much different ball game than what we're looking at right now. So if anybody could actually do it, if anybody could actually form a third party, it's a guy like Musk. It really is. That's just sort of the way that it is. All right, US 30. I did want to talk about this opening range breakout strategy. This is a good one for us as well. I use a 30-minute chart. I'm a big fan of the 30 using the orb. Everybody in here basically loves the 15-minute chart where we get a real tight range and then we play a break. 30-minute chart will keep you out of trouble though. So right there was your opening hour of trade on Wall Street. This is the US 30. Nice, really tight range. And then right there would have been your entry. There would have been your entry point. Something like that. Stop loss you have two options. Number one, you could put it beneath the range itself, beneath the orb. Number two, you could put it beneath the trigger bar. In this case, beneath the trigger bar worked. That would have been that bar that closes outside of that range. That's your buy signal. I don't like that. I think it's way too tight. I think you could get hurt doing that. But if you did do it, you pretty much already walked out with a 1 to 2 ratio, at least 1 to 2.5. So really caught a pretty darn good move. Now, as far as the orb's concerned, you could trade it every single day. I really like my Fibonacci's. That's sort of what I rely on. And we've seen the big rally out of the US 30. We're up almost 1%. But something like this, spike low to a spike high, and there's your pullback right around 38%, which is at 44,376-ish. That's not a bad area. That may not be a bad area to buy late in the day if, in fact, you want to be on the long side of this market. And I think you do. I think you're going to get that bill passed. It goes back to the House of Representatives now, just to sort of cover this and let you guys know what's coming. But Trump's mega bill squeaks through the Senate, but House can still reject the final version. So what happens now is the bill goes back to the House of Representatives, and they are going to be able to either accept it or reject it. My guess is they're going to accept it. There were some things stripped out of there, specifically some AI protections that were stripped out that pretty much everybody didn't want. Nobody could figure out how they got in there. But something like this is going to go back to the House, and my guess is you're going to get it signed on the 4th. So right now, the House now has the reins on Trump's domestic policy package. Trump has repeatedly insisted that he wants the bill on his desk by July 4th. He's going to sign it on the 4th of July, and they're going to make a big deal out of it. So my guess is final vote was 51-50. That shouldn't surprise anybody. It's a very close one. But remember, you've got the tiebreaker is going to be your vice president, which is J.D. Vance. He's going to vote for these things every time to break the tie, as Kamala Harris did during the Biden administration. So a lot going on here. As far as what to expect out of this, expect it to be signed. I don't see any other way around it, and that's one of the reasons why your US 30 is where it is. But so the big news today is got to be politics, the big beautiful bill. Let me see. We've got some more comments over here. Let me see. JOT, I am using the 9 EMA and the 20 EMA strategy, and crypto is a really good one. Well, that's fantastic. We're going to look at crypto here in just a second, but you're absolutely right. The 920 on a daily time frame, cash crypto, like let's say we wanted to do something with Bitcoin, which is right around 106. I mean, you can see what we had here. We had a cup with handle developing, and then we just did not get our break. We sort of rotated down, and now we've got that buy signal setting up on the 920 again, which I love. I mean, that right there is a pretty darn good zone. You can see there's going to be your buy entry, 107,396. So if you're not already long on that 920, you could definitely be long right now, and that's just a matter of buying it and seeing what happens. So if you were going to take this 920 trade on Bitcoin, which I'm incredibly bullish on Bitcoin. I don't really see any reason to be selling this, especially with the White House being as cooperative as they are with crypto. So this trade's relatively straightforward to me. It's easy. Swing low right down there, right around the 22nd of June. There's you got 97, 834-ish, maybe something like a 97, even 96, somewhere down in there would be your stop loss. And at this juncture, if you're long from 107.5, somewhere in there, then you could definitely start looking at a profit target, right up at 110 maybe. Is that far enough for you though? No. If you're going to take a position and be serious about it, you could probably be shooting maybe for a shot at 120. That's a 1-2, it looks like, just about somewhere in that neighborhood, maybe a 124. I'm still optimistic that Bitcoin hits 125 by the end of the summer. That's another, 18% roughly. I think it could easily do that with the right news cycle and maybe even some interest rate cuts. We'll talk more about interest rates tomorrow on our Bollinger Band W strategy workshop, but it could definitely be a pretty good time to be going long on Bitcoin, looking for that next leg up to 125. Let me see you, Antonio. Yeah, have you covered gold futures? What can we expect going forward? Now, we're going to go ahead and look at gold right now, and we had another trading idea that I wanted to cover, the Great Britain pound Japanese yen. But as far as gold goes, we can go back to our MT5 platform here. When we talk about gold, we talk key levels. Now, this right here, you can see this weekly nice little trend line that we drew the other day, and you can see there is the big break beneath the trend line. So theoretically, if you were a trend line reversal trader, you would be holding shorts either from this bar close, this weekly close, or you would wait for a retracement up to our trend line, and then you'd be looking to get short. So for me, if I was looking right now at gold, I would say, okay, do I want to be long still? Yeah, I like the long side of it. I think that the dollar falling out of bed and really just getting slaughtered since Trump was inaugurated has given us an interesting perspective on gold. Remember, as the dollar gets crushed, gold goes up. And there's no question about that. You've got a nice big rally of about 1% today. This 30-minute chart, it doesn't lie. It's just an incredible trend here. These are my own personal indicators, so I'm looking at a 13-period EMA and some Bollinger Bands, and you can see this is just an uptrend. That's a breakaway uptrend, really going back to the 30th of June, which is yesterday, and the market just kept going and going and going and going. So what can we do right now? What do we want to do? Well, we could take it down to a 4-hour chart, and I could see just try to find a pullback zone to buy. I really like the 4-hour chart on spot gold. It's one of my favorites, and the reason why is it's a true 24-hour commodity. And a 24-hour commodity means that you're going to get significant action pretty much around the clock. Now, the market does dry up. Don't misunderstand what I'm saying. Towards the end of the afternoon or into the U.S. afternoon, the market will dry up. And that's absolutely huge that we understand that, because once we get towards that COMEX close for futures right around 4 p.m. Eastern time, you really do see a lack of action in gold. So if you're going to be trading gold, I highly recommend, especially intraday and you're going to scalp it, I highly recommend the short time frames during that London U.S. overlap. I really like it from about 8 a.m. Eastern till about 11 a.m. Eastern. I think that that's a fantastic time to be trading. So that's about 6 to 9 my time, 6 to 9 a.m. my time here in the Mountain Time Zone. So you'll have to adjust. Those hours for where you are. For instance, I have no idea what 8 a.m. Eastern time is in India, so you'll have to forgive me on that. But as far as gold goes, this is very straightforward to me. Just a basic Fibonacci buying a pullback. I have no problem doing something like this. Nice big rally. It really has been a pretty good rally from right around 32.87 up to 33.58. A pullback right there to 33.26 and a quarter, maybe 33.27. That's a pretty good area to attack. And the reason why it's a pretty good area to attack is it's 38%. That's a nice retracement, and that suggests that if price does pull back to us, we're going to figure out if this intraday trend, this 4-hour trend, this bullish trend is going to remain valid, or if, in fact, it's going to undergo a major challenge. So for me, I want to watch this market prove itself at 33.26, and I think that we have a great opportunity to get that. I don't necessarily think we're going to get knocked out of the box there. So if I was looking to trade this, I'd be looking right around probably 33.27 and a quarter, maybe shade that $1, and then be looking to get, about $2 or $3 return on that. You should be able to get that relatively quickly if, in fact, this area does hold. Now, from a macro perspective, if you want to talk a little bit about, what's the market doing right now with respect to the macro picture, what do you have developing? I've been looking at this chart a long time, and I really, we talked about a basic strategy yesterday that clearly a lot of traders have done. They just bought on the open. Today's the first day of July. So what did they do? Well, they know they've got an out, which is down there at about 32.47-ish, 32.50. So you can stop yourself out beneath last month's low, June's low. But as far as July goes, we are bumping higher. And so a lot of players, a lot of traders, a lot of retail traders, they showed up and they bought to open the month. That's not necessarily unheard of. That happens quite a bit, actually. The question is, where do we go from here? The big thing that I would stress, there's an old statement, KISS, KISS, keep it simple, stupid. Keep it simple. What is this? It's a bullish pennant on a monthly time frame. Bullish pennant. What's the catalyst for the bullish pennant? Why is this thing set up? Number one, geopolitical activities, wars. Number two, a failing dollar, a dollar that's the DXY is down about 96, trading right around 96.81. That's dreadful. This area right here, 3,500 to the top side. That's where the market is tested and failed. We've had some bullish action to go back up and test that price point out again. But the big challenge that we're having is geopolitical situation. All right, Iran, Israel, that's changed dramatically. That's slowed down dramatically. So we haven't got a lot of the safe haven folks that want to protect their holdings. We also don't know what's going to happen with rate cuts. We don't know what's going to happen with the United States Federal Reserve. If they cut interest rates in this inflationary cycle, it's hard for me not to see gold banging up above 3,500 and testing the waters maybe up to a 3,750 or 4,000. That's what I would think. Now, the market's not doing anything. So from a broader perspective, we have to say, okay, that's a doji, that's a hammer, inverted hammer right there, a hanging man. And now you've got a little bit of price action here to open July, up about 1%. Do we get the continuation to 3,500? A gun to my head, long or short, I would be long. But if you wanted to sell, I understand, but be careful. A lot of market drivers all point to the top side of this gold market. But for right this minute, we're in heavy consolidation. That's for sure. So I hope that helps a little bit, Antonio. That's spot gold. As far as gold futures, this is going to be your August contract. We're trading Augie gold. Essentially, this is the same type of stuff. It's essentially the same chart. It's just different prices. But you can see 3,500 is still going to be huge. 3,546 is what it looks like the futures contract went to. 3,539, excuse me. And then you've got tight compression, doji, hammer. And it's the same type of mentality. Do we get a breakout? The only difference between this and our spot gold chart is this. What was what is May's high? May's high is at 34.77.3. What is June's high? 34.76.3. We're about $26 off of this zone. We're $126 off. Yeah, see, I made a mistake right there. But this area right here, primed for a bullish breakout. Primed. The reason why is you had a proximity test of May's high in June, and then we traded. So we have an inside month. We had an inside month that traded inside of really a key level, which is right around 34.75-ish, something like that. 3,500 is definitely on the books here for gold futures. I think that's a bullish breakout if we get there. So if in fact you do see the market rally and blow that out, be ready for it to make new all-time highs on this Augie gold, and that's going to be taking out 35.39, somewhere up in there. Be ready for that. Be ready for that. That can happen anytime. We're still about $100 down there, but remember, hey, listen, our daily ranges, our range oscillators for gold have been around $80, $70-something per day. Be very careful taking shorts here. And if you find yourself short right up in here somewhere, be careful. Once those levels get washed out, you could easily see gold run $10 or $15 in the blink of an eye. So be very careful there. Hope that helps with gold. Moving forward, I would rather be long than short. However, I'm not necessarily ready to buy right here. 33.50 Augie gold, you could probably buy and get away with it. But you'll notice how slow the market is right now. Very, very slow, guys. And when you start to see these types of formations, it means that the market liquidity, volatility is really drying up. So something to think about there if you're trading gold. I hope that helps. Just remember, this is week 27, 2025. Monday was U.S.-Iran. Today was Big Beautiful Bill. Wednesday was EIA crude oil inventories. Thursday's NFP. We're going to have NFP live for you on Thursday. That's going to be an early morning for me, but I'm excited to really check out these jobs numbers. I think we have an opportunity to do pretty well. And then Friday's going to be the 4th of July. We're going to talk more about limited liquidity as the week goes on. I'm not seeing a whole heck of a lot that's blowing me away here, but it looks like they're going to pass that bill, and they're going to do it on a holiday week, which means that coming back after July 4th, the July 4th weekend, that Monday the 7th, absolutely anything can happen in the markets, and I think we're going to see a lot of action. All right, everybody, I'm going to go ahead and sign off for now. Thank you for joining me. Like I said, this was going to be a tricky week to trade. If you're with Switch Markets, you have an account, be sure to be checking your email inbox. You should have got our weekly preview and our pick to click, our pick of the week. Be sure to check that out. Also, that video's out a little bit earlier today on this Switch Markets YouTube channel. All right, guys, that's it. That's it for today. You have a fantastic trading session, trading day. Trade the action well, and we'll talk soon. See you.